last 4 or 5 years in international finance, International Finance Corporation. Um, uh, it is International Finance Corporation is one of the private sector wing of World Bank Group, and then we are helping the private sectors in terms of not only the financing tools, also giving a lot of advisory services to the clients in terms of environment, commercials, as well as technical aspects for different countries. Right now, we have been working in Asia, particularly in Pakistan, Nepal, Laos, Myanmar, and other countries, basically helping the private sector's developers as well as international developers in terms of financing of the projects. Not only the financing, also we are providing a lot of advisory services during the project implementation and initial designing phase as well. So basically today I want to cover regarding how complex the financing of hydropower. It is not easy process. So I want to touch upon some of the critical things, and also because being a consulting arm, so I want to also tell about what is the role of the consultant during the this financing of hydropowers or appraisal of these hydropowers for any financing institutions, to appraise the projects, either these projects are good or bad in terms of not only from the technical side, also commercial side, sponsor side, as well as market size, and how the projects are being implemented across different countries. So I'll touch upon that topic during the presentations. My sound is clear. Just I want to ask.
Yes, sir, you're audible. Perfectly audible.
Okay. Okay. Thank you so much. Thank you so much. So the presentation is also today, like I'll cover what are the hydropower challenges across different reasons, why hydropower is a very complex process. It is not somewhat doing any construction work in the city areas or urban areas. So it is a very complex phenomena while implementing the hydropowers. So maybe I'll touch upon some of the challenges during the hydropower implementations, and maybe second parts I want to touch upon the project finance, where not only from the hydropower implementations, other infrastructure projects where project finance is key in terms of financing these projects, and what is the limitation of this financing. And third one, I'll take upon what are the key challenges during the hydropower financing, and what are the mitigation measures in terms of these infrastructure project implementations. And maybe I'll share the one detailed toolkit for risk assessment, how these risk assessment will be carried out by the maybe lender or financial institutions, or in the behalf of financial institution, maybe consultant, how these things can be assessed, or maybe how they do the due diligence in the process of the the implementation or financing of that particular projects. So basically, like the hydropower projects present the unique challenges I explained before in the budgeting as well as construction process. It is not only the technical limitations, also it is a lot of limitations in terms of budgetings, the project report costings, and also contracting, and there are many issues during the hydropower implementations as well. Feasibilities as well as final design require the extensive investigations. Either project will be feasible or not, nobody knows, but like investors are investing particularly for the feasibility as well as the detailed design during the process. And then if you find some sort of major challenges, peoples are in between. Either they will go one side, or they want to stop the projects, or they want to continue the projects. That dilemma always behind the hydropower projects. Some of the projects, I found that some of the developers, they don't want to sacrifice their initial work, so they want to implement, but these projects went on a very difficult situations in terms of the implementations process itself. So generally also there are a lot of hydrological and geological challenges, because climate change is also impacting a lot in terms of river basins. Also, all the river basins right now are heavily impacted by other water usage, not only from the energy side, also like irrigations, drinking waters, as well as other water resources activities. So that like either these river basins are very good in terms of hydropower development or not. Also, we need to ask the that pertinent questions during the implementation of these hydropowers. And also, if everything is there, but like if you are contracting it, then fully EPC contract may has a lot of challenges. Maybe it's a little bit rare in terms of like you will get the final product, because there are the facilities need to be developed. If project is a very remote locations, access road, transmission infrastructures, also the power evacuation challenges, bottlenecks, as well as also social and environmental problems. These are pretty unique in terms of these infrastructure projects. And some of the projects that has been maybe a lot of social problems due to the water resources right of the communities. So that also takes key challenges during the implementation. Also, the second challenge people are not thinking about, because everyone wants to develop the hydropower projects, because the gestation period of these hydropower projects is around maybe 5 to 10 years. And 10 years the country's energy dynamics is totally changed. Maybe 10 years before, they do have a lot of demand, lot of the requirement in terms of energy. But like right now, after 10 years, all the dynamics has been changing. For example, right now, the previously Pakistan do have some sort of electricity deficit, but right now it seems that it is getting better, or maybe like it will be the surplus scenario. And then what is the market of these hydro energy generations? Either like not only from the energy side, also ancillary services, ancillary market, how these hydro can help the national grid itself. So we need to think from different perspective in terms of power purchase agreement of these hydropower projects. If you look on, because I went through recently World Bank study, it shows that roughly 70% of hydropower projects were completed with cost overrun of around 30% excess cost. That means it is a huge challenge in terms of implementation of this project itself. What happened? So recently, who is okay? So recently, like if you look on some of the statistics of around 6-7 hydros, if you look on the tunnel side as well as cost overrun, around 140% of cost overrun has been found in any projects where like in the detailed project report there is a 6, 7, 9, 10% contingency budget has been allocated, but the cost overrun went 140%, 226%, 135%. That means the cost and contingencies are not reflected in the detailed project reports. So if you look from that perspective, there is a huge challenge in terms of that project financing, because if we are financing the projects, how much money we need to allocate in terms of financing these projects. Because even for the IFC, I found I went through some of the projects and I analyzed in terms of tunnel size as well as cost overrun. There are significant cost overrun in terms of the constructions process and constructions challenges in the tunnel. Not only in the tunnel, also there are a lot of cost overrun due to the project delays, because the material cost, dollar rate, US exchange rate has been highly impacted, and some of the countries even we found that there is some sort of significant inflations in the country itself, also that impacted the project cost itself. Also from the all the contracts they have given for the international contractors, they need to pay on the US dollar, and then like that US dollar has been significantly, if local currency is going down, that means also there is a sort of lot of effects in terms of that sort of things. But like, the key thinking behind, like if you look on also there is a tunnel. If tunnels are there, then we need to look from the different perspective, and what are the investigation, how much money you have spent it during the project design, also that counts a lot. If you look on the Nepal's, like, almost all, if you're looking, I was looking on around 30-40 projects across Nepal, major projects, they have been delayed by 3 to 4 years. So delay in 3 to 4 years, meaning not only from the cost overrun side, also revenue loss in terms of whatever they have taken in terms of good model. So also they lose the concession period, they lose the project life, every sort of things has been hampered, and then project analysis or return analysis has been heavily impacted on that sort of things. And in particularly in Nepal, I found that I analyzed some of the projects, and I found that there are the contractors who are coming to the hydropowers, they are not exactly familiar about the Nepalese geology and the geological conditions as well as construction practices. Also, we do have a different road conditions, different geological conditions, different river basins, and these river basin has a different river hydraulics itself. So also that has been hampering. And I found some of the international contractors, their tendency of leaving the work in between. Some of the contractors, even Italian and other contractors, are some sort of highly impacted with this COVID sort of things, and some of the contractors are financially very weak in terms of their the work as well, and contractor do not have the funds, then there might be a lot of challenges during the project implementations. And some of the projects are also a lot of challenges in terms of land acquisition, forest clearances issues, and also there are some sort of weak project management, and transmission lines from the utility side are also some of the bottlenecks for some of the projects itself. So these are, and from our key takeaways from these scenarios is early stage studies are relevant in the construction risk assessment and contingency allocation. So people are thinking that if we invest on the feasibility or detailed project report stage, then these costs will be significant, but these are not. These are investment. For example, if you are spending on the physical model of any hydro site, maybe it will take around few thousand US dollars, but it is giving the significant improvement opportunities in terms of design, in terms of the investigation, in terms of operation modalities, in terms of the sediment management, in terms of the intake behavior in the river hydraulics itself. So there, so that also we need to think from different perspectives, and also from the project implementation, also we need to understand from the banking perspective. If you are looking for international financing, then these lenders are very critical in terms of the project appraisal, in terms of PPAs, either these PPAs are bankable or not, what is the protection from the government side. I will discuss on the project finance later on, what are the challenges in terms of these contract itself. So, and honest and realistic contingency calculation at the financing stage is very important from the engineering side or consultant side, because we need to be very conservative in terms of these calculations during the project design time. So maybe also from the lender side, as a lender, because also I'm appraising a lot of projects from the financing perspective from the IFC side. Also there is we need to identify the risks, what are the key risks for the project financing, and then also we need to look on what are the challenges in terms of revenue generations to service the debt for the any bankers. So maybe also debt and equity returns of the sponsor we need to look from, and need for the reasonable allocation for the risk to borrowers and government utilities as well. Also, like, if you are negotiating with PPAs as well as also concession from the government side, also we need to be very balanced in terms of, risk allocation between two parties. Either government can take, some of the force measures, political risks, also, some of the climatic risks for the sponsor itself, if sponsor is investing in such natural resource based generations or electricity. Because the hydro is a long-term finance. It is not the maybe short-term finance like solar projects and other projects, but it has some sort of long gestation period, and then we need to look from these risks itself. If you look on any hydro, initially these projects are moving very good. If you are following, these projects are somewhat looking very good, and then their projects are progressing very well because contractor mobilized, and then initial work is there, and then site, everybody thinks that project is moving very well. But if it is if it is moving, then like then if you are entering on the tunnel, then a lot of problems can come on. Maybe if you are entering on some of the some of the external work, or maybe river work, or maybe dam work, maybe your previous investigation was totally false, and you are not finding any strong geology inside the intake itself. So that may hampers the cost, that may hampers the project progress. And then also the planning process need to be revisited in terms of construction practices itself. You need to have maybe 5-6 plans: plan A, plan B, plan C, plan D. If like that sort of challenges is coming on, then what will we do as a sponsor or as a financial institutions? How we will look on that particular projects in terms of the cost overrun? How we will manage this cost, and what are the cash flow? And either equity will be injected more, or debt financing will be revisited in terms of restructuring of that particular loan. So that sort of things also we need to look from the project progress, and then also from that perspective. So because of these difficulties, the hydropowers need to have a project finance, so that like because the financing long-term infrastructures, not only hydro, industrial projects or public services based upon the non-recourse or limited recourse financial structures, where project debt and equity used to be financed, the projects are paid back by the cash flow of the generator of the projects. So like any projects, infrastructure projects that need to be these projects need to be returned, the equity return as well as debt return. These sort of things need to be managed by the cash flow of that particular project generated cash flow. So what is the difference between project finance and corporate finance? Because some of the corporate companies, they are seeking for the loans from financial institutions to implement particular projects, but these loans has been delivered in terms of the guarantee from that corporate companies. So the financial institutions believe that corporate company is very good to to return our money, and they will guarantee all the difficulties of the project. They don't care about the projects, and then on that particular basis, the loan will be delivered to the corporate level, so that corporate level will use that money for particular projects. But for the project finance, it is some sort of sponsor plus projects, and finance separately with a non-course debt financing is the project financing. So that like project any loan will be directly directed to the projects, and then particularly that projects, the risks will be mitigated by the both parties, as a sponsor, as a financiers. Both need to be both need to be, work together to mitigate these challenges so that, project will be feasible. So that, like, for example, if you are looking of any hydro project, maybe Narayan hydro project in Pakistan, then if you are financing from the, financial institutions, maybe FMO or IFC or any international lenders, first, what exactly they look? They look on that particular project will, give the return in terms of, project returns. What is the tariff of the, electricity in the Pakistan? How much PPA rate will they get? Or either it is dollarized or local currency. What are the, currency inflations, swap cost, hedging cost? That sort of things also we need to look from that perspective. So from the project finance perspective, for any hydropower financing, we need to look from the debt repayment using the cash flow generated from the operation of these hydropower projects, and limited resource to be project recourse to be the project is sponsored, debt secured by the project assets including revenue producing contracts. Priority on the project cash flow is given to the lenders, because if you are taking any loans from the bank side, also you have to be prioritized from the bank first. Payment for the bank is the first. Then the consent of the lender is required to disburse any surplus cash flow to the project sponsors. So what are the advantages of project finance? It is sharing the risk between various parties, sponsor, lender, and as well as government. Also, it is off-balance sheet treatment for the debt, and avoid and minimize the restriction on the sponsor's financials, and also avoid any negative impact of the project on the sponsor credit standing, vice versa. Allow the lenders to appraise the project on the segregated and stand-alone basis. Better tax treatment and transparency as well. And then from the disadvantage, if you look on the project finance or hydropower project finance, is the project finance is quite complex. It is not easy, and structuring and sort of things, there will be a lot of overhead to finance these particular projects. And then also agency cost, overhead cost, lawyer cost, every cost in the transaction costs are very high, and debt can be more expensive due to the non-core natures. So these are like some sort of disadvantage in terms of project finance. Pause over here. Any questions from the participants up to now?
Not yet, sir. No questions yet.
Okay, thank you. Thank you. So my slides are clear, no? So these are very visible in terms of the screen. Is there any problems?
No, sir. They're visible.
Okay, thank you. So like, I'll go through what kind of projects can be financed through the, the project finance particularly, because I talked about the hydro. Beside hydro, other infrastructure projects can be financed with the project finance. For example, if you are looking on the road projects, also these projects are financed with the project finance. If you looking on the ports or a refinery, airports, these big projects are financed by the project finance, because if you are looking some sort of equity financing or corporate financing in these big projects, maybe any company in the world wouldn't have such the equity, or maybe initial project investigation or any project financing of, from their side, equity financing, whole equity financing on particular projects, because these projects are so expensive, so costlier, so complex, and so complicated as well. So the project finance is especially attractive to the private sectors, because the public financing is, for example, any hydropower, that hydropower is managed by the government utilities. These can be done by the public finance itself. But from the private sector perspectives, if you are looking to finance any these infrastructure projects, the project finance is very attractive. And then also they can fund the major projects off balance sheet, because then don't need to look from their balance sheet as well, so that these can be financed from the off balance sheet as well. So from the structure point of view, how we will structure any hydropower projects? If you have a hydropower project in Pakistan, either this project would be good for the financial institution like IFC. We need to evaluate it. We need to define that particular project, either scope of the project, either this project, for example, any hydro projects. Right now we are under investigations. We need to look from the different aspects, not only from the technical side or environment management side. Also, we need to look from the commercials as well as also the market perspective. For example, if Pakistan will be the surplus scenario, if demand will be not coming, then either financing that particular hydro project is good or bad. We need to analyze. Either market will support it or not. If demand supply scenario, if supply scenario is high, then what would be the consequences in terms of tariff? Either same tariff the project will get or not. So that sort of things also we need to investigate during the defining the projects. And then also we need to identify the parties. Who are the parties particularly to develop that projects? Not only from the sponsor side, not only from the lender side, also who will purchase the electricity, and who will give the concession to the private sectors, or who will give the construction licenses for these particular projects. Either government is comfortable or not. So who are the parties? Not only the financial institutions, also the key party is somewhat also the utility company, where they will buy the electricity. Maybe transmission systems operators, maybe central electricity authorities, maybe like the Pakistan state governments, provincial governments are there. So that sort of things also we need to look. And from that perspective, from the structuring point of view, also we need to look from the negotiate the risk allocations. How we will negotiate the risk allocation between government and parties. Also maybe off-taker risks between utility to generating companies. Also, what are the contractual document obligations? We need to look from the project finance perspective if you are financing any hydropower projects. So parties and roles. For example, there is a one project companies. If there is a one project companies, there are many parties. For example, main sponsor is a one party. Other stakeholders are other. Market is other. For example, market, who will buy the electricity, and what are the inputs? Maybe contractors, the consultant or investigations. All the initials inputs are within the project company. It is a cost. And authorities who are governing that particular projects, who will looking in terms of regulatory perspectives. What are the other parties are equipment suppliers for any hydro projects. EM suppliers are like some sort of international companies, or maybe like some of the companies, renowned companies. Either quality of the equipment has been delivered, what sort of automation has been given to these equipments, what are the O&M strategies, operation and maintenance, how much money you want to spend, and what are the contractors, and also financial institutions, financiers. Not only from the one lender, there may be 20, 15, or maybe 10 lenders in one particular project. And also project implementation, the management is key. The project management is very key to implement that particular project. So these are like somewhat the parties if you are developing any hydro projects. So there are typical risks in terms of that particular project implementations. There is a construction risk. There is a the market and revenue risks. If maybe 5 years down the time, maybe utility will say that we do have a surplus electricity, we will not buy it. Then it will be very difficult question. If it is a counterparty risk, also political risks. If there is a political change in the country, another party will come, then a lot of policies will change. Then there will be the significant impact on the taxation and other sort of things. Maybe that sort of political risk. Who will take that particular political risk? There are regulatory and legal risk, financial risk is there. Also, if country is going on, some sort of the debt trap from the international loans, and the currency has been changed drastically. So who will take that particular financial risk if cost overrun is there, if tunneling is as a huge problem? That sort of, also interest rate and foreign currency risk I already told about, and operational and performance risk. If you are developing any hydro in a X river basin, then upstream side there will be the big hydro coming on. What is the impact of this big hydro to the downstream project itself? So we need to look from the revenue perspective. Either same energy will be generated, either more or less, and who will take that particular considerations in terms of in terms of these operational risks. Also sediment management, flushing, every sort of things from the upstream plant will be impacted for the downstream plant itself. So construction risks, everyone knows about what are the construction risks during the construction process. So how to manage this sort of risks is very critical in terms of the project implementation of any hydropower financing itself. Counterparty is project party defaulting in the performance of its contractual obligation. If like some sort of if you have given the contract to the contractors, if like the sponsor has been like financially insolvent, so and then cannot invest more money, and if there is a cost overrun, who will bear the cost? What are the challenges over there? So these need to be also look on. The key to assess all the counterparties, sponsor, offtake, constructions, operations, contractors on their ability to perform the obligations. Either these peoples are liable to liable on their obligations. So, and what are the interests? Also, like from the lender perspective, credibility and track record of the sponsor is very critical. Either these sponsored, private sector sponsored, or even in a government sector sponsored are not very capable to invest further money, then it will create a lot of problems for all the parties who are involved in the project implementations. So if sponsor is very critical, then we need to look from the strategic investors. Either like this investor will be blended by very experienced players. For example, X company in Pakistan is working to develop any hydros, then why not we will discuss with ADF to give the partnership with these companies, and then take the major stake as a strategic partner or minor stake as a strategic partner. So that experienced companies will guide the particularly these companies. And also from the strategic investor, what are the track records? If somebody from maybe Dubai or maybe maybe Qatar are investing in Pakistan hydro, then like either what is the interest of their the investors? Either these are the strategic investor, or they want to come to Pakistan to learn about the hydros, or what are their interests? Also we need to understand. Also you need to have a very good financial investors as well, and who are the companies to financing these particular projects. Also we need to understand from that perspective. And also like the financial capacity of the sponsor, also we need to look about there is the project is relying on the partial or full guarantees from a sponsor. What is the sponsor abilities to fund that particular projects under contracts? Can the sponsor fund the additional cost overruns? These sort of things also look. From the construction side, timely or within the budget or specifications, the construction of the projects. Can any, and lenders will typically look on the contract structures, parties involved, that sort of things. Is either these are adequate? I don't think. Like also we need to investigate a lot of things, types of contract as trunky EPC contracts, either FIDIC contracts has been or maybe other standard contract template has been using by these contractors. So also trunkies arrangement are better to avoid the contractual gaps. If there are affiliated contracts, then if electromechanical contractor is doing the job, civil contractor is doing the jobs, one contractor will blame the another. So either these two contractors has a very good interface or not. So, that sort of things also we need to look on. And preference of the prime contractors which establish the track record in the sectors in the country. Either these contractors are working in the country, or if sponsor is providing EPC insured contracts, is arm length and costs are aligned with the market values. Otherwise, it will be very difficult to execute. And cost overrun, fixed price lump sum contracts, is these also contracts has a significant impact in terms of hydro. If tunnel has a significant cost within the tunnel progress, then who will bear that particular cost? Either contractor or owner in terms of EPC contracts or lump sum contracts. That sort of investigations also we need to look from. And completion and delays, and who will be the responsible of delay? How much are the liquidity damage in terms of EPC contracts? That sort of things also, from the financing perspective also, we need to look on. So there is one particular question: which type of contract goes in the favor of the clients? So, like, it depends on the risk allocations. So particularly from that, perspectives, the contracts, there are, split contract and EPC contracts. EPC contracts are more expensive than the split contract. If the sponsor is very good in terms of their technical capacities, or maybe they do have a very good owner engineers, if they do have a very good consultants, then only if you are going for the split contracts. Split contracts are cheaper, but split contract are more risk because client has a more risks. If EPC contract is there, then all the risk has been transferred to the contractor against the cost. Because if you are providing any EPC contract, then contractor will take much money in terms of risks. Whatever risk is there, I'm taking. So you need to pay more. That is the strategy. So that if the client, if client is very, wants to be very comfortable, then EPC contract are very good contract for them. But the cost of that EPC in terms of whatever risk contractor is taking, you need to take, you need to pay the premium, because all the risks are not free. These are the chargeable. These are the money. So any investors investing money also, that is risk. So that risk has a cost. So that also you need to acknowledge the higher cost in the EPC cost. So that if client is favorable, you need to pay more with comfortable position. So that that is my answer from that sort of things. Yeah, the construction and completion and delays, is EPC contractor contract date is certain. Is there any delays? Who covers the debt of obligations, operating costs, penalties? How much are the liquidity damage in the EPC contracts? So these sort of things also we need to look and mitigate during the project preparation, because these are some sort of overseen or overlooked during the financing stage, but these are very critical in terms of financing appraisal or financing time, to look from the lender perspective or financial perspective. If I'm financing any project from the IFC side, I'll look on the contracts, not only from the contract side, because if you are using the FIDIC, that doesn't mean that FIDIC will give you all the solution. These are only templates. We need to write on these templates particularly. For the writing of these templates, it is different with a different country perspectives. For example, in Pakistan, if you are writing these contracts, then if you are telling that any delays in the process, the maybe contractor will pay that much money per month, or revenue. Maybe hydropower project will generate that much revenue. Around 20% of revenues should be beared by the contractor, or maybe some sort of debt obligation need to be taken care by the contractors. If that sort of clause in the contract documents, these are the penalty clause. But there are not only the penalty clause, there are the bonus clause. If you complete the project before the schedules, then you will get that much of the amount from the total project cost. That sort of also devising that sort of contract methodology. Even we have recently financed some of the projects. I was the in the appraisal team from the technical side. Even that sort of bonus mechanism we have in trail from some of the contracts. These contracts, even in the FIDIC, has not so such guidance, but we have taken such guidance for the some sort of encouragement for the contractor itself. So that sort of also not only from the penalty side, also we need to look from the bonus side, from the construction risk arrangement on the contract side itself. So so that there are practice of liquidity damage generally kept, the project contingency reserve accounts, educate cushions in the construction period to be managed. In the some of the cases, sponsor may provide the completion support, where sponsor cover the debt obligations during the delays. If delays is not due to the contractor or project company's non-performance, but due to the reasons of force majeure, earthquake came across, pandemic come over, who will be the responsible? Both parties are not, because the environment is not such. Then there should be some sort of backup provisions in the offtake contract, as well as covering risks from the government side also, because also government should provide some sort of force measures in these the hydropower project, because it is a natural resource projects, and ultimately these assets will be the government one, because people are building these projects in terms of some sort of good models. Maybe they will transfer the asset around maybe 30, 35, 40 years. It depends on the country itself. So all the assets are ultimates from the government side, so that these assets need to be also from the government side. And then also regular supervision by the lenders, engineers is recommended for the, especially for the complex construction. So there are a lot of engineers has been hiring by the our IFC. For example, many projects we have hired the third party lender engineers. They are overseeing these constructions, and they are also visualizing a lot of delays, and then we are in the front to mitigate that sort of course during the process itself. So operation and the this that the project facility will not be operated and maintained at the levels. If you are giving any hydro project for 30 years, then who will do the operation and maintenance? What are the, if somebody is not paying the very attentions in terms of O&M, then O&M cost will go up. Then there will be the machine damage. There will be the if you are not maintaining the runner properly, then you need to replace the runner itself. Then who will pay for it? That sort of also from the, is the operator an outside contractor or sponsor is undertaking the project operations? Who will take the O&M? What is the track record of operations in terms of globally on these assets as well? So these are the points, like for example, insurance, benchmark operating cost, O&M, some sort of KPIs we need to develop in terms of the project risk mitigations. Also, operating and maintenance cost, I have already told, are escalation formulate are aligned in the market value, or the that revenue arrangement. Also, we need to look from a lot of angles on that sort of, and supply arrangement, spare parts. We need to look from that perspective, from the operational performance risks. And these are the points I included in the slide, are some sort of mitigating measures in terms of operation risk and financial stability of the suppliers, these sort of things. And optic and market risk has not been discussed everywhere, because it is a very key that either power will be sold to the market with a competitive price or not. That need to be ensured. If you are looking on the Pakistan scenario right now, either upcoming projects are hydro projects are really giving the electricity to the the utility or not. Either solar, wind, and other technology will come across, then maybe there will be the some sort of less scope in terms of hydro. Or hydro can provide the ancillary market for the intermediate region of the solar and wind projects. So where is the benefit of the hydro? What is the developer as well as buyers negotiation? How much long-term PPAs? Either these PPAs are bankable or not. Either these PPAs are backed by the government or not. Either these PPAs are somewhat clearly legally binding for any any developers or any utility companies are not. What are the transmission infrastructure supported for that obligation? Either take or pay PPA or take and pay PPA. So that sort of also market we need to evaluate for any hydro projects for for example, either there is a market risk or not. So these are some sort of contractual agreements on the the uptake and developer and buyers also that need to be considered during the project financing stage as well. So also the payment of risk. Who will if any payment from the off-taker will not be given to the developers, then who will pay that particular money? Because as a lender, as a bankers, I'm not operating any assets, because IFC experience is not operation of any hydropowers, because we are not acquiring that hydropower projects, because that is not somewhat guarantee we are looking for. From our side, if we are financing any projects, we are looking the some sort of guarantee from the government that if that asset or that power has not been taken care by the utility company, then government will acquire that asset and pay our money. So that is somewhat looking for our guarantee we are looking for as a bankers, so that that sort of guarantee has been given by the government or not. So that is in the concession, it has been mentioned or not. So that sort of things also is a very important in terms of project financing, and also the either off-taker is financially strong or not, credit worthiness of these the off-taker are very critical in terms of and pure market risk. If project is pure market risk and tariff risk or discounts as a some sort of reservations of that particular demand supply scenario, competitiveness, market dynamics, all need to be reviewed during the project finance, because all the revenue is paying all the investment from the project finance perspective or infrastructure financing or hydropower financing perspective. So legal and regulatory, I have mentioned a lot of these regulatory regulatory structural risks, and also like what are the role of policy regulation, standards, these sort of and PPAs, these sort of things. Also political risk, also the collapse of the political scenario of the countries, who will be bearing all the political force measures. Either that has been is the history of the nationalization of these assets or not, terrorism, politically motivated strike, unrest, all are we need to look from the from the protection from the government side, ensure that government undertakes all the repayment lenders in such political and force measure scenarios, and political action interactions. That sort of things also need to be tackled during the project finance. And interest rate, I've already mentioned about the interest rate. Interest rate is fixed, variable, or floating. If we are doing the financing, then also there is a currency exchange rate if dollar rate or maybe hard currency rate is going up. So that sort of things also need to be looked. And then also, are the project revenue or debt in the same currency, are revenues or operating costs in the same currency? We need to look from either tariff is in US dollar or local currency, or because if investor is lending on the dollar, then revenue would be in local currency, then it would be very difficult in terms of in terms of this financing itself. So these are very very so another risks, like I'll be this will be my almost last slides. Maybe, another risk is environmental and social risk mitigations, because people are not taking consideration on the environment and social standard. These are very critical in terms of international lender aspects. Maybe IFC performance standard. The IFC performance standard is acknowledged by around 80 international financing institutions, which follows the IFC performance standards. So maybe I have put it some of the link over there. And also there is a categorization of the projects, either project A, B, C, what are the damages from that sort of things. And these land acquisitions, biodiversities, these are very, very good in terms of sustainability issues. And then, the IFC performance standard are key in terms of sustainable issues. In terms of also hydropower sustainability, International Hydropower Association, IHA, has also, guidance towards the hydropower development, how this ENS risk mitigation can be taken consideration. These are from the, and also financial risks are there. So maybe I'll go through the financial ratio. Debt coverage ratios are very important if we are doing the loan life cover, life cover ratios, project life cover ratios. These are very important in terms of financing, and other residual risks we need to look from regulatory constructions, and that could not be allocated by the project contracts. So also insurance is very critical, and we need to look from the insurance perspective, either these disaster, climatic conditions, either these insurance are covering that sort of financing or not. And all, if you are looking on project companies, there are regulatory and political risks, and that need to be tackled by the local laws and the host government, and financial risks that need to be tackled by the sponsor as well as banks, and off-taker risks that can be tackled by the utility company, and supplier risks, supplying company, the operational risks, operator need to be taken care, and construction risks that need to be taken care by the contractors. So these are the players. These are the players. Like for example, host government or local government, local laws, sponsors, bank, off-takers, suppliers, operators, and contractors. These parties need to have some sort of fair agreement, and agreement need to be very transparent and dynamic, so that that need to be taken care and managed, and there need to be risk and reward for every parties. Every parties need to be benefited, and if project is going very smoothly, then it will be the win-win situation for all the parties. Then these are the parties for the financing of that particular project. So detailed risk, completion risk, and potential mitigation measures I have highlighted. I will not go on detail. I have already discussed about the technological, hydrological risks, and completion and delays risk, cost overrun risk, and ENS risk, and reputational risks. I have already, and post-completion risk, and force majeure risk, ENS risk, operational risk, market risk I have already covered. Then stages of financing. There is a 3 stages of financing. One is pre-financing, second was financing, and post-financing. So there are a lot of the transactions. So we need to look from the financing perspectives for these angles, so that project, any hydropower project can be financed, and that need to be tackled during the process itself. Thank you very much. So maybe I'll pass to you for any question answer.
In case of any questions, the participants are requested to use the Zoom chat box, or you can also use the raise hand option, please.
There is a one raised hand from Ikram, sir. So maybe.
Ikram, sir.
Yeah.
Sir, which are the main factor that a client should look especially in finalizing the contract that goes in favor of the client.
Can you repeat the questions again, sir?
So my question is that which are the main factors, especially for the owner I'm talking, that he looks before finalizing the contract. I mean, which are the main factors that he looks that goes in favor of the client?
Because that's where my differences are, like particularly from your question perspective. So my thinking is it is not the favor, it is a team spirit. Like for any contracts, the fundamentals of any contract is whatever work you need to pay from the client side, whatever work has been carried out by the contractors, then that need to be paid by the client. That is somewhat the fundamental scenario. Okay, the fundamental scenario. So the problems come across with any contract is the tendency of beneficial from killing one party to another party. Either contractor wants to claim a lot of things, or maybe clients can do, maybe is willing to do many works with a small payment. That is not possible in terms of cost factors. So that anything for the contract preparation from the client side, first you need to understand about your projects. Either your project's investigation has been done properly or not. If you are building any hydropowers, and if you are doing any tunnel of around 5 to 6 kilometers, then if you have a drill of around only 5 or 6 drills in the tunnel areas, then how can you identify the geology properly? And how much drilling you did during the feasibility stage? And how you are going to identify these sort of things? If you are a sponsor, good sponsor, then you have done the feasibility study with a good amount of money, using the good amount of investigation, then you will be very confident that, okay, these sort of things, this much money I will pay for that particular tunnel for any contractors. Okay, so if that sort of scenario is there, then you will be very confident that, okay, that tunnel per kilometer cost will be that much. I will allocate that much of money. Maybe 20% the contingency I will give for the contractors. Then your cost factors, your feasibility analysis would be very good. Then only the contractor would be very comfortable in terms of the work delivery. But there are 3-4 cases from the client side. The client need to be understand, because one is either these contractors are very capable to deliver that work or not. Either these contractors are workable. If you are choosing any contractor in Pakistan, if he is doing a lot of work in maybe in Brazil, if he is coming to Pakistan, he doesn't know any geology, then maybe that will hamper your the project implementation, because you need to select the experience, the contractors who are doing the job in Pakistan. That is must good factors, because people are looking only cost. Cost is not explaining the experience of the contractors and the implementation strategy of the contractors. So that first is the experience of the contractor is very critical if you are a client. And second one is what are the technologies where contractor will be using by the contractors. For example, if you are doing the tunnel blasting methods, like what are the equipments either contractor will be mobilized in terms of that executions, so that like the first part, if I'm a client, then I will look on the experience of the contractor rather than the cost component of the contractors. If somebody is quoting very cheap and he is leaving job in between, that is not correct. So that like even cost is little bit expensive, but like these parties are very experienced and proven, parties, then I'll go for, the expensive parties. But the government rules, if you are looking on the public project, that will be very complicated. From private sector angles, that need to be tackled from the, client side. Maybe you are aware about the, that is, okay, who will going to share the damage? Okay, that is very interesting question. Thank you, Nabil sir, for that particular questions. That is very pertinent questions in terms of disaster risk management. No, so that's where, like, government security is very important. That's where concessions are very important. In the concessions, they have a, some sort of clause of force measures. It is a force measures. Any disaster is coming, it is a force measures. So force measures need to be defined in the concession documents, in the licensing documents, so that government can protect these projects in terms of, damages. Some of the projects who have a very strong concessions, they are getting the money from the government, India government. Uttarakhand government as well as state government. There are responsibilities that has been shared in the concession documents, and some of the cost is bearing by the insurance. Also, there are insurance. Some of the cost has been insured during the insurance period as well. So there is a huge damage, but still this damage is governed by not only from the sponsor side, but these damage are also taken care by the government, insurance, as well as also, like, as well as from few from the sponsors as well. It depends in the segregation of the damage. What are the segregations? But the major cost of the these force measure damage will be governed by the government as well. So that is somewhat the concession is very important. And that's where international companies, if these are investing on particularly on India, Nepal, Pakistan, or maybe Bhutan, they are looking, some sort of protection from the government in terms of force measures, earthquake, disasters, these sort of things. But for the Uttarakhand, I will explain to you how it has been damaged, but like, that need to be also tackled during the, project design stage. So I was pretty concerned about that particular projects and that particular river basins, because I worked on some of the projects before, and that sort of damage will be happening. So I knew, even I told, some of the developers during my project appraisals, and from the IFC side, we declined to investment over there. Natural disaster in terms of gloves, in terms of, the high Himalayan outburst, because we need to look from the, that particular analysis, because, some of the, snow lakes, these are very in danger in terms of, recent progress. So there are a lot of reports in terms of globes, and from the ISIMOR as well as from the, international different organization, even NASA has, forecasted that sort of information before. So that disaster management is key, and then emergency plan is key. For any project design, these need to be taken care, and there was not such, early warning systems, as well as also, some sort of emergency planning was not there. So a lot of damage, even one or two plant has been wiped out thoroughly without anything remaining over the site itself. So that sort of things even happen in India as well. Thank you. In the summary, like force measures, that has been covered by the government if it has been written in the concession. Yeah, there are, a lot of research, and, there are individual research papers are there in terms of, the highlights of delays. Particularly in Nepal, I do have, some of the challenges. Maybe I will share with the NS packet team if I have few. because all the data I presented before are my analysis from our projects, particularly from the World Bank side. But still, I do have a few research. Maybe either these are shareable or not, I don't know exactly, but I have few information I'll share what some of these research with you peoples in the maybe after the training programs. That is good. Yeah, there are very good examples. For example, in Nepal, it is a Upper Tamakosi project of 454 megawatt project that is being implemented by Nepal Electricity Authority. If you Google it, you will find it. This is Upper Tamakosi project. Upper Tamakosi projects. I'll type over here. Upper Tamakosi project. So that project is one of the best project in Nepal. In terms of technical sort of things, project was very good, but the project has been delayed by around 5-6 years already, and right now it is under commissioning. And previously the project cost was around in Nepalese rupees around 8 to 9 crore per megawatt. Right now it has been around 20 to 25 crore per megawatt. So it's a double per megawatt cost. So if you look on, there are a lot of reasons behind the project delays. One reason is because the contract is a split contract. There was a civil contract, electromechanical contract, as well as hydromechanical contract. Hydromechanical contract has been taken care by Indian company. Electromechanical component was a European company, and the civil contract has been given to the Chinese companies. And during the time, there was no significantly any technical challenges, one or two, maybe one tunnel, rerouting and that sort of things, but it's still these are manageable. But without any technical difficulties, project went delays by around 5 to 6 years, because hydromechanical contractor is not capable to deliver the work on time, but electromechanical and civil were. And then the company need to pay the damages for civil contractor as well as electromechanical contractor, because they need to mobilize their peoples on site. That sort of delays has been occurred due to the project management skill, due to the contract management skill, due to the the FIDIC contracts, whatever given to the contractor itself. Project delays and other risks increasing, especially in large hydros, multi-purpose dams. So cost overrun is common in this case. What is the special risks for such kind of projects and mitigations in your view? Particularly for these high dam projects, first as a as a lender, as a bankers, I prefer the investigation, a lot of investigation. For example, Nampan 2 in Laos, that is 252 megawatt, and the dam height is around 200 something, 200, I forget exact numbers, that much meter height. But during the investigations, we found that there is a some sort of good foundations in terms of dam. But later, when we were going to the construction, there was no such the strong geology in terms of over there. Then we need to go around 150 meters down, but we need to go around 300 to 350 meters down in terms of that construction. So whole dynamics were changed. Then we realized that the problem was the investigations, because we did only 3-4 drill over there. So the investigation requirement is pretty high, so that if we were invested a lot of money during the investigation time, then the cost was totally different. Maybe we were moved the site from maybe 20-30 meter up and downstream itself. So in terms of special risks, one is also if you are doing the projects, if there is a some sort of things is high dam project is there, I will go for the risk allocations. In terms of cost contingency, I will go very conservative, because if you are allocating around 10 to 15%, maybe go for 20% if there is a large project and investigation are pretty few. So that even like EPC, if you are giving to EPC, you need to compromise. That sort of multi-purpose dams and storage projects. There are many dynamics behind it, not only from the investigation side, also like from the project implementations, contractors, contract managements, and then also you need to put a lot of money in terms of management cost. You need to hire a lot of international and experienced peoples on the site to mobilize the contractors and to guide the mobilizers during the construction time, so that the management cost also goes up. And I found that some of the projects people are focusing from the technical side, not from the management side, because management cost is pretty low and people are not allocating the money, and they're putting the local peoples, they are not experienced, and then they are not able to guide the contractor itself. So I'll give you one example. 30 megawatt projects, particularly that projects, we were thinking that we will capable to do that particular projects with a local experts. But later we realized geology was pretty complex. Then we hire the external consultant from the multi-consult Norway, and he was based in Nepal. So we put him around 2 years, and then his cost was significantly high as compared with the local cost. So that maybe that particular project, we are able to commission on time because from his guidance and his team guidance. Without that, it was very impossible. So that sort of analysis also we need to look from the mitigation measures, not only from the technical side. Also, we need to allocate the management peoples or technical peoples during the project implementations from the expert point of view. Who is the tunnel experts, and in between also that particular project we hired the Stocky, the Swiss consultant, to do the tunnel investigations in terms of the project implementation. Also, we did that sort of things. So it depends. So maybe I don't have a very firm answer, but I experienced a couple of very small projects, but we manage that sort of things with international, very experienced peoples who came to the site and manage that sort of risks. And we need to allocate that sort of money for these peoples for the project implementation. For example, yes, thank you. It is a nice question, White Sir. But it's a big challenge for us. For IFC, big multi-purpose dam projects are not very good for the the multilateral donor agencies, even for World Bank as well. Right now, our environment and social standards are pretty strong, and if there is a high dam, or there is a maybe if there is a pondage area is very high, then there need to be a lot of resettlements. And if there is a lot of resettlements, then people's if the dam is replacing around 1,000 peoples, then it is impossible to finance these projects from our reputational risks, from the multilateral financing institution like us, because we follow the strict environment and social standards. If that standard is not followed, then it will be very difficult for us to implement these projects. Siddha Asum, dear, best to minimize the risk is to the financial modeling and the project. Yeah. What is your opinion? Okay. So financial model is somewhat, it is a model. But yes, every project, there is a financial model. Like, even we need to look from the financial modeling point of view. But still, the model is there. But if you are putting the input wrong, then you are getting the output data wrong. The garbage in, garbage out, and that need to be tackled on during the financial analysis of any projects. That's where our expertise from the IFC point of view, it's very critical. So during the financial model, we need to look from the different perspective, from the revenue regime. For revenue regime, for example, you are analyzing in the Pakistan tariff, then what is the tariff exactly? Maybe around 9 cents or 8 cents. But either that 8 cents will be applicable throughout the project period or 15 years, or maybe that will change maybe in the course of the project period. Maybe 10 years, maybe it will be 3% escalation, or maybe 5 years no escalation. Or maybe the tariff would be 50% dollarized PPA or 50% normal tariff, or tariff would be around 20% free energy to the utility, maybe 80% total tariff. So what is the outage? If you are doing the financial model or revenue, generally people take the outage of any power plant is around 3 to 4% in terms of transmission. If you are working on one river basins, if outage is particularly this transmission line has an outage of around 10%, if you are using 4% outage in the financial model, that doesn't reflect the exact revenue regime. So that's where where we are. If IFC is financing, then these sort of analysis we will do very significantly. We are doing right now many analysis in terms of transmission and power evacuation challenges and bottlenecks. And if you have a 216 mega projects, if you are expecting around plant factor of around 60 to 70%, but actual plant factors in the real life scenario would be around 40%, then our whole dynamics will go to the it will go to the different dynamics, and then project financing will be the different dynamics. So we need to tackle these sort of things during the financial analysis or financial modeling of any projects. So maybe I don't know, either I answer your answer correctly or not, but these are very critical. And then these financial, the realistic point of view, and if we are financing any project, any wind, any solar, or any hydro, we need to be very realistic in terms of power evacuations, grid availability, dispatch from the load dispatch centers. So we need to look from that perspective as well. Okay, thank you. How much time do we have?
Sir, we have till 12, but I think if there's no more questions, we can conclude the webinar.
Okay. Any questions? Anything from my side? Okay, if no more questions, then you can ask me the questions in my email address. My name is Bhishma Pandit. Just reverse my name, Pandit Bhishma @gmail. My personal email address is there. Even in a slide, I have mentioned my personal email address. So if you have a further questions, please type your questions in the email so that I'll try my best to answer your questions in between. Maybe later on after this webinars. And I would like to thank all the participants for their times, efforts, and then also eager to learn from mine. But it is not somewhat I'm very expert, because it is some sort of knowledge exchange sort of things, and I tried my best to give you my experience, because whatever I'm telling you it is from my experience. It is not somewhat I'm the expert of any subject matter. So every time I'm feeling as I'm a student, I'm learning. So thank you very much for all. Thank you so much.
Sir, that's very humble of you. Thank you for your time and for the great presentation. It was a pleasure to have you with us. So this concludes our webinar for the day. Thank you all for attending. We hope you have learned from this session and enjoyed it. Thank you very much.
Thank you. Thank you.